AMD, which used to be Advanced Money Destroyer, has reported earnings. The stock is down 9% in the after hours on a very strong report. So I'm going to talk about the earnings report today. I'm going to tell you why I sold AMD. I no longer own AMD stock. I was talking about AMD early on. It was very hated at $121 per share, and I was calling for $600, which did happen, and it almost happened. And it was an amazing run. I didn't catch the whole run. I sold a little bit before the major move, but I made about 370% on my call option. So I'm going to tell you why I sold it and talk about the valuation today. And I really hope you enjoy it as always. Now, looking at AMD, they posted 50% revenue growth. 50% for AMD, which people believed was dead a year ago, is absolutely mind-blowing. And the CEO is proving everyone wrong. Looking at data centers, the company grew 107%, guys. Like, I remember doing videos on AMD and people saying NVIDIA is killing them. And I was trying to tell them they can coexist. The data center space is so large. It's not a one winner take all. AMD just has to take a fraction to be successful. And this is what's happening. And they're growing 107%, guys, in data center revenue. Operating margin is skyrocketing to 31%. This is absolutely amazing. They've signed contracts with Anthropic and another contract with Microsoft for CPUs, GPUs with Anthropic. They're expanding a lot of partnerships, and things are on an up and up for AMD. They're looking really good. I mean, you could see the reacceleration here in data center revenue growth from like 22%, 39, 57, 107%. This is an amazing, amazing comeback for AMD. Now, the PC segment and gaming segment is a little bit slow. It's no secret. It's not only AMD, it's slow in general due to memory prices and other things that's happening in the economy. So it barely grew 6%. And operating margins did decline, and that's a little bit of a cyclical business, you could say. And this is shouldn't be a surprise really for anybody. Earnings per share was also really good. It grew about 82%, and things are looking amazing. Now, you might ask, if everything is so amazing and the company is posting such numbers, then why is the stock down 9%? And why you don't own AMD anymore? Why don't you buy it back, or why don't you buy options on it again? Or why I don't have zero exposure to AMD? Well, it's mainly because of the valuation, guys. Like, I believe in great companies and buying great companies, but I don't believe in buying or holding great companies at a very expensive valuation. I want a combination of a great business and a great valuation. Once those two are not lining up and I see a better alternative, then I move to this better alternative. This is what happened with AMD. The stock used to trade 20, 25 times earnings. It even went, I think, one time like below 20 times earnings, if I'm not mistaken, like 19 or 18 times. Now it's sitting at 58 times forward earnings. If you compare it to NVIDIA, which is an amazing company, by the way, amazing CEO, it's the leader, it's always going to be the leader, very innovative, is trading at 21 times earnings. There's a big difference between 58 times and 21 times. Now, yes, AMD is growing faster than NVIDIA. It likely has more runways on the growth versus NVIDIA. But if you look at NVIDIA, you're paying 21 times and you're getting pretty impressive growth of 88% this year, next year 43%, and 2029 expected to be in the 25-30% range. This is not bad at all for paying 21 times earnings. So you don't need to get a lot of things right for you to have a decent return with NVIDIA. But with AMD, you need the company to pretty much perform to perfection and to make no mistakes and for everything to go on. Like you could say it's kind of priced to perfection. Now, this is the company's own target from Investors Day for 2030, 5-year target is over $20 in non-GAAP earnings per share. And again, this is non-GAAP. The company has a lot of stock-based compensation, but non-GAAP is $20 of earnings per share. Now, the easy way I would value something like AMD is I would trust the management team and take the $20 of earnings per share. I would assume that 5 years from now in 2030, 2031, AMD will be more of a mature company. It will kind of be more similar to NVIDIA's growth profile. So it will likely trade at the same multiple that NVIDIA is trading at today, which is about 20 times earnings. Now, if I take $20, which is the management team's guidance, and I time it by 20 times earnings, which is NVIDIA's current multiple, I get about $400 per share. The stock right now is trading at, after hours, it's at $472, guys. Now, if I'm trying to get it double on AMD over the next 5 years, I have to buy AMD today at $200 per share. This is using the management's numbers. This is using the valuation of NVIDIA, which AMD will be more similar to NVIDIA 5 years from now. And this is not accounting for the dilution of 10% ownership to OpenAI. Remember the contracts that with the warrants, OpenAI will own 10% of AMD and Meta will also own 10% of AMD. So you also have to account for the 20% dilution. I haven't even accounted for that. And I'm getting a fair value to get a double of about $200 per share. Now, let's assume that a lot of people are right, that AMD is sandbagging guidance and earnings per share will be much, much more than $20 per share. Well, we can take in 25 times earnings, which again, I think it would be a stretch, but let's assume they can hit $25 of earnings per share by 2030. Now, that would be, again, a little bit of a stretch. The current EPS is $1.66 non-GAAP. If you annualize it, it's about $6.64 for now in 2026. So this earnings per share has to double 2 times or has to triple from now to 2030 just to hit about $25 of earnings per share. That's not an easy task. There's a lot of competition here, a lot more coming. A lot of the CapEx spending could be peaking this year. That's the expectations next year. And it will start to slow down in terms of the growth. So it's not as easy as it was. But let's assume again, they can hit $25 of earnings per share. And let's assume again, they're going to trade at 25 times earnings instead of 20 times earnings. Now we take 25 and we time it by 25, we're getting $625 price target 5 years from now, which is into 2030. The stock right now is trading at $471. That's not a lot of upside from here. Now, if we divide it by 2 to get it double over the next 5 years, we have to buy AMD today at about $312 per share. So even if I'm taking a number above the management's own guidance, which I normally don't do, and I'm taking the multiple above NVIDIA, which I normally don't do, and I'm not even accounting for the 20% dilution, I still don't see how the current valuation of AMD is justified. So for me, the current valuation of AMD is not justified. If I had to pick a semiconductor stock between the two, I would be buying NVIDIA any day. If we have anything in space, NVIDIA is a bet. NVIDIA is going to have an edge over there. SpaceX is the leader. They just committed to only using NVIDIA because he said they're the best, so, and you're buying it 50% lower than AMD, and you're getting 50-60% growth. So for me, AMD on a relative basis, it makes no sense. For me, I don't even own NVIDIA right now. I only own Qualcomm. I talked about it. I mean, I like the setup. I'm buying it at about 8 times 2029 guidance, so I like what I'm doing with Qualcomm. And maybe I'm wrong on AMD and it keeps getting more expensive and gets more overvalued. That's possible. And maybe I will look back and say I was wrong. But based on what I'm seeing today, I'm not really seeing how AMD deserves to trade at 58 times earnings and NVIDIA is trading at 21. And Qualcomm is trading right now, I think, at like 15 or 16 times earnings. So I think AMD is overvalued under $300 or around $300. It would be a great risk to reward setup. At today's price, I don't believe AMD is presenting the right risk to reward setup in my opinion. And that was my update on AMD. Hope you enjoyed it. It was not financial advice. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.